you. All right, let's get on with it. Just another boring day in Forex. We've gone through the Fed meeting. We've gone through the Bank of Japan meeting. We've gone through the Swiss National Bank meeting. We've gone through the Bank of England meeting. Besides that, nothing's happened. Huh? Besides that, nothing's happened. Hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Cheers to you, matey! To all the pip pirates out there. Yeah, boy! Huh? Robbing and stealing. Hey, my name is Wayne. I'm a currency trader. It's 9 o'clock in the morning. I'm exhausted, and I've had too much coffee. I already have the coffee shakes, and it's 9 o'clock in the morning. So, yeah, that's how we do it. That's how it gets done. That's called productivity. Living on the edge. So anyways, good morning to you. Let me know how I can help. I think we'll keep this one short because so much has gone on. So I'll take a look at things. I'll show you what you should be doing. I want you to do your thinking and your planning. I'll answer some questions and we'll get out of here. If you're in my swing trading group, we meet tonight. 4 p.m. All day traders, all swing traders, we meet today. We're going to plan out next week and maybe October, all of October. Could be a rabbit, could be. Hey, why don't you join the group? You do that by becoming a member of FX Bootcamp. You might not be able to afford it, though. It's $88 a year to join FX Bootcamp. I don't know, big money. I mean, dude, I got to buy a yellow Lambo. So I need 100,000 members. Yeah. Will it be October? No, it won't be. But, Burned, I answered that question in January. Huh? January. So once again, it helps to know. So anyways, there are many resources available. I've been doing this for 20 years. People have asked for help in many different ways, not just live streams. So that's why I have a community, but also in the description below, you find a link to my book. You find a link to other training courses. You find links to free training courses. But you'll find a link to tradersway.com, whom I believe to be a trustworthy, ethical foreign exchange broker. And trust me, my friend, that is rare in this beeswax. So tradersway.com, open up a demo account, check it out. You're like, oh, this is pleasant. You'll look around, everything's clean and organized and easy. You can choose your platform, it's all good. Execution speed is fast, spreads are narrow, swaps are good. I'm like, hey, yeah, it's great here. But the thing is, when the Swiss National Bank pulled their peg on the euro, many big brokers went out of business because they were trading against their clients. Went out of business because it's not ethical. Traders Way was just fine. So put 2 and 2 together. Who had the better business model? Well, traders, that moment right then and there, they absolutely earned my loyalty and respect. So thank you, Traders Way. And if you don't have a broker or you don't like the broker you're with, switch to tradersway.com. Easy peasy lemon squeezy. Oh, look at that. That's you. Look, that's you. I have to move you over here. Oh, you saw behind the scenes. Okay. Who has a question about what has happened in the last 24 hours? If there's no questions, then we can keep this very short. There we go. Moses said, Wayne, after the interest rate on the Swiss franc, the dollar strengthened against the Swiss franc. Okay. However, weakened against Aussie and gold. I was deeply confused. Well, remember, there's a lot going on right now. Okay? There's a lot going on right now. So you might be witnessing more than one thing at the same time. Because remember, you might be looking like this Swiss franc here is the Swiss franc versus everything. Right on, Johnny. That's cool. That's awesome. You know, I really want to get the clan together and have some cocktails and cigars again. We have such a great time when we meet up. So anyways, cheers to you. Cheers to two. So anyway, so the dollar strength against the Swissy, however, it weakened against Aussie and gold. Well, it weakened versus everything. Okay. Sound is breaking up. I can't do anything about that. So let me ask you something. Why is the Japanese yen strong? Oh, actually, let me just go back to Mubarak's question before I just go on. Bank of Japan intervened in the FX market. Yes. But I think given their 240% debt, it's difficult to raise interest rates. Well, they didn't raise interest rates. And also maintaining their yield curve policy. Not necessarily. So I think the bigger question, Mubarak, is that can they continue the intervention? Okay. Now, if you look at the you know, like for example, there's a bit of confusion, right? I think it wasn't the Bank of Japan, it was the Ministry of Finance that intervened. But I was on their website earlier today and there's no information about it. They haven't really updated their website at all, really. Anyway, so you might want to spend maybe some time on the Ministry of Finance. Let me post this. Maybe as a group we can take a look, find something together. Let me pop that. So the question, look, if you exchange your money to buy a JGB, all you're doing is converting one asset into another asset. Your balance sheet has less cash, but now you have more JGB. So, right? But now intervention, let me ask you something. How does the Bank of Japan make the yen strong? I want everybody to answer here. It'd be great if we had dozens of people answering. Frank says yen will be strong next week. It's already strong. What are you talking about? How did the Bank of Japan make the yen strong? Okay, lots of different answers. Decrease supply, yes. Okay. If they sell their assets for yen, no. Well, yeah, I guess depends on what you mean by assets. It's okay. Pavel's got the best answer. Henry's got the best answer. TA's got it backwards. So there you go. All right. So they buy Japanese yen. But this isn't a foreign exchange. You can't buy yen with yen. Mubarak says raise rates, but they didn't raise rates, and the yen skyrocketed last night. Okay. Which means I got knocked out of one of my trades for something like 750 pips profit, and the other one I jammed my stop to 50 pips profit. So when the Bank of Japan intervened, I got knocked out for 800 pips. So I'm out for now. So what they're doing is they have to take something on their balance sheet and exchange it for Japanese yen. And that would be selling US dollars. So now if you look at the USD index, even though the Fed just jacked up interest rates and indicated that there's a long ways to go, that really strengthened the dollar. And Aya did very well in that move. Thank you very much. Then the Bank of Japan intervened and the yen got weak. The yen got strong and the dollar got weak. So this is an indication that the Bank of Japan, or the Ministry of Finance, whoever actually did it, took their dollar holdings and bought yen. A Christian says if they really want to intervene, isn't it better to announce it and then do it? Well, they did. They did that like a week ago. The market, the yen has been strong for like 2 weeks. So going all the way back to September 20th, right? So, right? So it wasn't unexpected. I've been talking about it for, probably 10 days. Okay. So Mujib's asking in the next question, how long can they do this? Well, until they run out of dollars or run out of some other asset. The thing is, it's never worked. But one of the things I'm going to do in the swing trading group tonight is take you through the history of Japanese, the Bank of Japan intervention, or Japanese yen intervention. Okay. Yeah, Matrix says it's easy to read the reports. You should see like, you want to see the report, the most recent report by the Ministry of Finance of Japan. Okay, check this out. So this is the most recent release, which is 3 weeks old, so it doesn't cover today. Check it out. Ready? There it is. That's it. Zero intervention. The total amount of foreign exchange intervention operations for the period. 0 yen. Zero yen. Love it. This is pretty funny. So but that's not today. See, that's what I'm saying. There's no update by the Ministry of Finance today, which is really hard to believe, right? See, that goes to January 18th. This is the newest stuff. And then it just takes you all this crap. And then you gotta like, how about here? And then there's nothing. Okay. So anyways, so you got to do your own due diligence. But again, tonight in the swing trading group, when the clan gathers, I'm going to go over the history of Japanese yen intervention. And they've intervened many times and both ways. The government has stepped in, or the central bank has stepped in and weakened the currency, but they've also stepped in to strengthen the currency. So we'll go over that. Jeffrey says, Wayne, I sent an email about the boot camp. Did you have a look at it? I don't recall it specifically. I do get more than 1,000 emails a day, but let's see, I gotta log into that one. No, you'll have to send it again. Yeah, no, you'll have to send it again. I don't know why you're emailing me, though, but... Yeah, send it again. So I did get an email a day or two ago. I don't know if it was you, but somebody sent me an email and they're like, hey, I'm trying to learn more about central banking and monetary policy. I don't understand what's going on in the Fed. And I've watched all the videos and it tells me, buy at this pivot point and sell at that pivot point, but I don't understand the central banking stuff. Well, there's a 16-hour course on monetary policy and probably a 17-hour course on macroeconomics. So I'm like, there's 30 hours that discusses that. But there's particularly one entire course specifically on money and monetary policy. So I have it's a 16 or 17-hour answer to the question. So I don't know if that was you, but I did respond to that person. I'm like, take the monetary policy course. How about that one? Okay. Frank says at least they let the market know about the intervention. Well, yeah, so there's rumors and stuff, right? And people are prepared. Like even last night, I'm meeting with the day trading group. Asia's just opening, but we're still several hours away from the event, which is the first one is the announcement of monetary policy and potential intervention. And I'm like, I have no idea what's going to happen. I really don't. I'm like, we expected the Fed. There was no surprise there. That was easy. Okay. At some point last night, I trickled around 13 or 1,400 pips. Cool. That's a good day. No surprise there on the Fed. So that's straightforward. But the Bank of Japan, I'm like, I don't know. Could they change their yield curve control policy? Yeah, they could. Will they? I don't know. But they could. Like, they've even mentioned 0.28, not even 0.3. So like they could say instead of 0.25, they can do it to 0.28. Cool. I don't know. Could they raise interest rates so that they're not negative from negative 0.1 to positive 0.1? Yeah, they could. They could, but they might not. Like, I don't know. And what about intervention? Are they worried now that we're on our way to 150? At historic lows for the Japanese yen. Yeah, they could, but they might not. Like, honestly. So, right? So that's that. But at least we're talking about the subject matter at hand. There were, right? These were known unknowns. Okay? Well, I'm not sure what that is, Frank, but don't be impressed by that, because that I would actually be. That's nobody knows before it happens. So if someone's reporting it before it happens, don't think that that's good. That's bad. I heard hours before the Queen died that the Queen died. Okay. Yeah, so that must be you, Jeffrey. You didn't you right? So like Jeffrey, when I tell you 1 over R plus E, which leads to the fractional reserve banking system, okay? And money is created through something we call the money multiplier. Right? You've done all of this? All right, then you got to be specific then about your question. You can't say, well, I understand the fractional reserve banking system, the money multiplier, and how money and credit is created, but I don't understand monetary policy. I mean, there's entire sections on quantitative easing, right? But this is what's going on. So, and now what we're doing is the Fed is raising interest rates and making money more expensive. They're also doing quantitative tightening, which would be the opposite of the right? The opposite of quantitative easing. So you have to, I don't know, I guess you got to ask very specific questions, because you can't just say, I took the entire course and I don't understand. That's too vague. I'm like, so if you understand that, then you should be able to understand the reverse of that. Right? If I wasn't prepared for the Bank of Japan meeting, but I want to make money, would it be a good idea to buy? I mean, I have a question. If I wasn't prepared, but I don't understand. You have to, Mahai, ask the question again. I don't understand. So you're like, if you weren't prepared for the Bank of Japan meeting, like, why were you not prepared? But you want to make money. Well, you can't make money if you're not prepared. Would it be a good idea to buy Japanese yen at a role reversal? You can't answer that question if you're not prepared. Richard says, from what you have showed, it's all about the supply and demand of currency. Oh, well, yeah, it's global money flow. All right. So anyways, Jeffrey, don't back away. But you got to be much more specific. Okay? That's all I'm saying. But if you take any, macroeconomics 101 course, or any course, at university on like monetary policy, Usually that's in your Macro 101 course. There'll be a little bit of like money supply and money multiplier. All of that's going to be right out of a basic textbook. Okay? How does the mighty peso hang in there? Well, the peso is a good currency, but priced in dollar. Dollar has been strong for the obvious reasons. And therefore, against the dollar, Mexican peso is done actually pretty good, but you wouldn't typically be selling USD peso. Today, because of what the Bank of Japan is doing, they sold, what is it, $119 billion, right? So there's short-term weakness in the US dollar, and I'm going to talk about, sort of the longer-term game plan tonight. Oh, is that right? Okay, Mahai. Yeah, 2 minutes behind. So, Jeffrey, I would try to isolate your question to like, what don't you understand? Okay, like the Fed is raising interest rates. Okay, are you telling me you don't understand how they raise interest rates? Through open market operations, which I cover, OMOs, if you remember that part. And in fact, it's the New York Fed doing the OMOs through their dealing desk. Are you not sure understand the consequence of the higher interest rates and what they're trying to achieve? Now, I know I discussed that in the monetary course, but also the macroeconomics course specifically goes over things like inflation and GDP. So, like, you should understand the higher borrowing costs of money and credit, its direct impact on the economy, and why the central bank is doing it, and what they're looking at and measuring to see the consequence of their actions. Or let's say you should be able to understand the goals of their actions. So, yeah, dive in there. If you've taken the course, I'm assuming you know all these things, but if there's sort of a disconnect because maybe some of it's opposite, because usually the Fed is not in a situation where we have high inflation and slow growth. So you're like, well, maybe there's a disconnect there, but drill down into the question. But you don't have to go figure it out. I mean, look, I went to college for 5 years. I could probably answer the question faster than you can do your research. Why is the Bank of Japan intervening in the market, buying American bonds to strengthen the yen? No, that's not what they're doing. Instead of raising Japanese bond yields. Okay. No. They're selling the US dollar to buy yen. They're not using yen to buy dollars to buy US bonds. No. So you're off there, Adam. That's your disconnect. Okay. Well, yes, the Bank Japan needs a weak currency, but maybe not as weak as it is. They are competing with China. So I think here's something we talked about maybe 3 months ago. One possible event that could come together is Bank of Japan, People's Bank of China, Bank of Korea, and other Asian central banks get together and they all want to intervene together because a strong dollar is hurting their economies. especially if they have to import energy in US dollars, which means they have to take their local currency, buy US dollars, which weakens their currency further, and then with the US dollars, they buy energy. So let's say they intervene together and they all sell their dollar holdings to weaken the dollar. And what do they do with it? They buy their own currency back. Another way they could do it is they could sell gold. Okay, Jeffrey, then grab the information from the website that you don't understand and maybe I can do some translation. So last night in the day trading group, I did a quick overview of the summary of economic, economic predictions, the SEP, projections, sorry. The summary of economic projections, and there's a lot of gobbledygook in there, and I just pointed out the one or two charts that you need to look at. So, that's something I did with the day trading group last night. Okay. But you have to understand, look, how did the Bank of Japan make the yen strong? They had to buy the yen. So they could exchange US dollars on their balance sheet in exchange for yen. Or they could take gold on their balance sheet and exchange that for yen. But they were buyers of Japanese yen, and they had to be, therefore, a seller of something else. Well, I can show you for a fact they definitely sold some US dollars. Not sold, they traded. It's the same thing. I'll give you some US dollars, you give me your yen. Okay. Then we look over here, and I don't see a dramatic move suggesting that, well, I guess because this is priced in dollars, maybe it's impossible. You'd have to get it priced in yen. And priced in yen, it probably has come down. XRP. Do I still have XRP? Oh, there it is. All right. Yep, big move there, huh? Finally got above that area. Okay, yeah, well, this is an R3, and that's for selling. So you're already about an hour and a half late from selling. Burns says almost time to short. You're about an hour and a half late. Okay, this is a selling pivot, and this is a selling pivot. This is R2. This is R3. Well, that might be your opinion. I don't have an opinion on this. I don't know anything about it. It already hit the top. The exact price. And immediately bearish engulfing candle. Then a lower high, lower low. So I guess what you're looking for is it comes down to the 21 up and then double tops there. Or I guess you're thinking this. Okay. But I can tell you R2 and R3 are exit pivots, right? And clearly a significant amount of the market knew that. Oh, I don't know anything, Burns. So I'm not saying you're wrong. I'm just saying that's what that means. It means get the F out. So if you didn't do that, you're not using the tool properly, and you should probably stop using the tool. The tool being monthly pivots. So again, I don't know anything about XRP. But I know a lot about pivot points. That says take your money and walk away from the table. This says take your money and walk away from the table. It's very clear. Okay? It doesn't really mean short. It means as a bull, you exit. Take your money, walk away. Okay. So anywho, there's a lot going on in the world. Where's my crap? I got so much crap going on. Price billion, is it here? No, this was from a while ago. Must be this one. No, well, this is the summary of economic projections. So again, I'm assuming you've already read all of this and you're going to say, I don't get it. Okay? So this is where Jeffrey would say, you know, I read these things and I'm not sure what's going on. In conjunction with the Federal Open Market Committee, held just recently, meeting participants submitted their projections of the most likely outcomes of real gross domestic product growth, the unemployment rate, and inflation between now and over the next 3 years. Dot plot. Okay. Things you can look at. The median or average opinion. Okay. GDP is going to improve. Unemployment rate is going up. Okay. Again, 2 years ago at the beginning of COVID, I said the new natural rate of unemployment is going to be around 4.5%, not 3.5%. The Fed, 2 years later, is now projecting that for next year and beyond, with a 4.0 average looking beyond the next 3 years. Okay? PCE inflation's coming down. Core inflation's going down. Fed funds rate is going to go up and then down over the next few years, with an average of 2.5, which we already know as the neutral rate. How do we already know that? Because we know the long run GDP growth rate. And then a lot of this you can skip. Okay? Change in real GDP, fine. Unemployment rate, fine. We already got the summaries. Here's the PCE, fine. These are all opinions by all the members, all the presidents of the Federal Reserve banks in the banking system, and all the governors in the Board of Governors, including the chair of the Board of Governors, which is also the chair of the Federal Open Market Committee. So they all vote, and this is what the average ideas are. So then we skipped all that because we already got that from the summary above. And then we get to figure 2. Federal Open Market Committee participants' assessment of the appropriate monetary policy, the midpoint of the target range or target level for the Fed funds rate. That's it. That's it, Bubba. This is what we're looking at. This year, okay, one dum-dum thinks this, the other dum-dum thinks that. Okay, so they offset each other. And 8 voting members said we'll be at 4.125, and 9 said we'll be at 4.375. So why don't we just add that up and average it together? And by the end of the year, we'll be at 4.25. That's where interest rates are going, according to the people that change interest rates. So if somebody is on TV or writing in a newspaper and they tell you what they think, don't listen. There's no need to think. The people that make the decisions have already said what they intend to do. Now, the only thing we care about is if the economic condition changes, they would have to change their opinion. But right now, if you're listening to a talking head on TV or some idiot on YouTube, they should say, well, according to the FOMC's summary of economic projections, they have told us interest rates are going to 4.25%. It's a fact. And if you have to think about it, you're doing it wrong. Okay, cool. Now, what about next year? One dum-dum thinks this. That's an outlier. We'll get rid of that guy. 6 say this number. 6 say this number. 6 say that number. Let's average it out. Okay, right there. The answer is 4.625% is where interest rates will be at the, in 2023. We know that. It is factual already. And again, if somebody doesn't know that and they're claiming they're a professional, they're not. Professional YouTuber. They play Forex and Fortnite. You can subscribe to both their channels. By 2024, look at this. All of a sudden, only 2 believe we'll be there. 2 think we'll be lower there. 2 think we'll be lower there. And 4 there. And 3 there. And 3 there. And whoa, 1 thinks interest rates will be dropped all the way to 2.6. So let's average these out. There's 3 at 3 at 3. 3 at 3.25. So let's say 3 to 3.25. 3 but 3.65. So let's pull that to 3.25. But then 4 pulls that up to, and then all of these. So really, we're looking at 3.75. Interest rates will go back down from a 4.625 to 3.75. So somewhere in there'll be some cuts in 2024 and further cuts in 2025. That's all. And most market participants think the long run interest rate will be somewhere between 2.25 and 2.5. Okay? I mean, look, right? I guess you could even add them in here. And then 2 think we'll be at 3%. So less than 3% is what's being priced in. Hamza says, Should we change our fundamental bias? Well, has anything economically changed in Japan? Okay. So anyways, and then everything else doesn't matter because we only look at this other stuff, right? I want to remind you what fundamental analysis is. We analyze changes in real GDP, changes in the unemployment rate, changes in inflation, changes in, right? So why do we care about all this stuff? Because we're trying to figure out, oh man, this gaming mouse is crazy. Because we're trying to figure out this. So do I really care about GDP and unemployment and inflation? Wages and rent, if you're going to do core inflation analysis, do I really care? I only care because it's a means to me trying to figure out what the central bank is going to do with interest rates. So I can skip all that, and this is what they're telling us. Okay? Cool. And that's what you should be doing. So hopefully that was helpful for you to understand what the Fed is telling us. Okay? Then how do I use this information in line with my bias if you would want to sell the dollar? Well, that doesn't make any sense. That's probably the issue, Jeffrey. Why would you want to sell the dollar? Yeah. Well, but it's hard for me to answer that because that would be the wrong interpretation of the data. So how would you use that if your bias was to sell the dollar? Don't sell the dollar. That's how you would do it. You would say you want to sell the dollar, and I'm okay with that because not selling it is a position. So you'd look at it and say, well, you want to sell the dollar because you believe it's worthless on the long run, that all fiat currency is going to collapse, that, or maybe that the angle is that there will be a coordinated central bank intervention. Okay, in that situation, Jeffrey, you would have to you would have to supersede economic conditions because economic conditions are making Asian currencies weak and the reserve currency strong. That's just factual. That's what the data suggests. That's what fundamental analysis would lead you to do, and that would be to buy the US dollar. But if you then take this further, now this is an intellectual leap of faith. It has to start with now a hypothesis, because now you have to sit back and say, based on what we have now, who wins and who loses? And how do you win and how do you lose? And you could say, well, countries like Japan are getting crushed on the strong dollar because they need to buy dollars to then buy energy. So they want to weaken the dollar. Or in reverse, it's not real. Look, it's all relative, right? They're not weakening the dollar. They're strengthening the Japanese yen. And with a stronger Japanese yen, they can buy more dollars. And with more dollars, they can buy more energy. So anyways, you could look at this and say, the facts are the facts are the facts. The yen is weak, the dollar is strong. The only reason that's not true today is unnatural forces in the market. The natural force is strengthen the dollar, weaken the yen. The unnatural is they're stepping in and manipulating the market the best they can to get some sort of outcome. All right? So you ask yourself, well, why are they doing that? Maybe it has to do with energy. Great. Well, what if they then got together, I mean Japan, Korea, and China are three powerhouses, okay? And maybe they get India involved too, who knows? And they all work together now to strengthen their currencies. Deflationary, by the way. Okay? Remember, I told you when gold was going up, it was countries like India doing that to devalue their currency. And at some point, inflation's going to go up, and they will want to sell their gold and increase the value of their currency. I explained it in great detail. This is why gold has been weak. So anyways, if the Asian powerhouses, huge economies in Asia, decide to coordinate and they all strengthen their currency at the same time, what's the common denominator of all these central banks trying to strengthen their currency? They have to sell dollar. So now you would have to think the next step, Jeffrey. There is what there is, and there's no debate about that. But what central banks do about it is the next step. That's the alpha. So again, I would go through the material, but think about it critically. It's not enough just to watch videos. Okay? So a C student can write a paper and they get the general concept. Maybe even a B student. I don't know. I'm not a B student or a C student. By the way, at Harvard, if you're a C student, you get kicked out of the university. I want you to think about that for a second. I'm not even joking. There are no C students at Harvard. You're rejected. You're a bad apple. So a B student. What does a B student do? They took the class, they read the material, and they wrote a paper that's not wrong. Okay? And I was an A- student through all 5 years. And an A- student understands all the concepts, right? Knows the material, and just did a better job writing the paper. They're just better writers. And right? And by the way, I was thinking about teaching this in the book club when I finally launched that. I thought I'd teach you like how to read a book. And I think the difference between a B student and an A- student is they read the book better and they therefore write the papers better and they get better grades. They're not smarter. They just worked more efficiently and more effectively. And then, of course, an A student at Harvard is a genius and they just do something on another level. And that would be what is required to be successful in Forex. Sometimes you got to be that next level. So now we're not debating the monetary policy of the Bank of Japan, the Federal Reserve, the Swiss National Bank, the Bank of England, the ECB, the Bank of Canada, all this stuff. It is what it is. It's just straightforward. Take the course, take notes, and there you go. The next step, going to like an A, by the way, there's no A+ at Harvard. Because everybody's smart. So you can't, it's just, there is no A+. It's not even a grade. So to get that perfect A grade, it's the next level. And you'd have to say, well, because of the strong dollar having a negative impact on currencies throughout Asia, if they decided to coordinate together, then you can get a scenario where with plausibly sustained US dollar weakness. Has that happened before? Hell yeah. So, do we have a coordinated intervention? No. No, we do not. Is it going to work? No. No, it will not. Now, will that make the Bank of Japan then call around in Asia and say, hey, will you do it? Can they do it if the Americans don't want it? Maybe America wants a weaker dollar. Did you guys watch the press conference or read any of the minutes? There was a question by one of the reporters. Did the Fed give their blessing? And that's not what the question was, but essentially, right? So it'd be very interesting at some point where the Fed, the People's Bank of China, the Bank of Japan, the Bank of Korea, maybe the Bank of India, they all get together, all of them together, and weaken the dollar. So, Jeffrey, that would have to be your hypotheses. You would then have to do the research, and if you're right on that, then that's your alpha. Okay? But I would go back through the courses. So, again, I don't know if you're an A student, a B student, a C student. I don't know. I don't know if you took notes. I don't know if you connected and engaged with the content or just watched it. I don't know. But, right? Maybe do it again. Okay? But what do we know? When things are good, the dollar's weak. When things are bad, the dollar's strong. You know what I mean? Like you have to engage with that. Just like it's like you want to become a scratch golfer and I'm like, you're not holding the club properly. I would start with that, right? Like the basics here. And most people don't even have this. When we are talking about a reserve currency, when the dollar's weak, things are good. When in regards to the reserve currency, when things are bad, the currency is strong. And in a non-reserve currency, when things are bad, the currency is weak. For example, Bank of Canada raises interest rates to 3.25%, the highest in all the world. Well, anyways, OECD countries. And the currency collapses. You're like, well, what the hell? When the Fed raises interest rates, the dollar gets strong. When the Bank of Canada raises interest rates, the currency gets weak. What the hell? Well, if you don't connect with that, like a simple idea like that, then everything else is gobbledygook, right? Well, that in about 4 shots, right, Robin? I like the analogy of golf when it comes to being a trader, because being a trader is very routine. And it requires, a striving for perfection and having the mental game to continue striving, especially when you're far from perfect. right? When McIlroy was a kid, the first time he played at the Masters, he was nervous. He was just a teenager. And he was all nervous. And I've stood on the first tee, by the way, at the Masters. You're like, holy smokes, dude. It's not a difficult shot, but you would know why, especially as a teenager, that you'd be nervous. And I don't remember who he was golfing with, but it was a big day in his life. And, of course, he hits it into the Georgia pine straw. And he was walking up the course, and one of the more senior guys had been there many times. He says, "Hey, kid." Right? And just gives him some advice. It's real simple, like, you got that out of the way? That's your bad shot? Now, pick yourself up, get on with it. Do what you're meant to do. And so it's kind of like that. We have to give ourselves our own pep talks. As a trader, we're always trying to be great. And most of what we do should be routine. Now, if your trade setups don't seem routine, then you're missing like there's a ginormous gap in what you're doing. I don't know what you're doing. You don't know what you're doing. But most of the time, like, imagine like as a golfer, yeah, you square up to the ball, you aim, you grip the club properly, and it's all about swinging the club properly, making good connection with the ball, following through. And it's the same shot you've done a million times, and 1,000,001th has to be good, 1,000,000th and second has to be good, just every shot. What changes a little bit is the ball's a little above your feet, the ball's a little below your feet. There's a bit of wind, so you want to keep it lower, or there's a sand trap, so you want to keep it higher. You want some spin. In other situations, you don't want spin. You know, you want to shape it left, you want to shape it right. Those are all little tweaks, but the golf swing is the golf swing, right? And even though you've done it a million times, 1,000,001th is still something you have to think about. And even practice in your mind, take a couple of practice swings, and then hit the ball and connect. And then deal with the consequences. Oh, went in the sand. Oh, well, luckily you've practiced how to get out of sand. Oh, it went over the green. All right, well. Okay. And you just deal with it. And that's kind of what it's like. But if you don't know how to hit the ball out of the sand, you're not a golfer. You're not a professional golfer. So I like that kind of analogy of staying calm and staying focused. You know how to hit the shot. You shouldn't be at the point where you're picking the wrong clubs and doing the wrong shot, all that kind of stuff. You're 200 yards away and you're like, give me a 9-iron. You're like, dude, you don't got that. You don't got a 9-iron 200 yards. Okay? So yeah, is it psychological? Yeah. But this is very routine. Okay? Sell at the daily 21. I don't know how to do that, Wayne. Well, then you got bigger problems. Pay the $88, right? $88. Pay it. Get on the clue train. But one of the things I've been showing the day trading group and the swing trading group is just having a longer term vision, having a bias. Oh, and by the way, my super secret fundamental alert service, I got amazing news that I'm not going to tell you. Not now. But amazing breakthrough. Especially for those that are on the retail platform. Oh my God. Oh my God. Do I have awesomeness for you? Awesomeness. Awesome sauce. Excuse me, sir. Could I have extra awesome sauce? Yeah, I got extra awesome sauce for you. But creating it yesterday broke a couple of things. So there's a little bit of pain today. But oh my God, you're going to love it. You're going to be so happy. I'm telling you, you're going to be so freaking happy. I can't tell you because it's a secret. Yeah. But for those that know, I mean, a lot of people have already signed up, right? They're already in. And I'm going to way over deliver. You're just going to be shocked. Like, no joke. Shocked. You're like, but Wayne, you didn't promise this to me. I didn't expect any of this. I'm like, I know. Huh? Matrix says, do you think a hypnotist can? No. I want human intellect and emotion involved in trading. Okay? So, for example, I simply want to tell you what to trade, and I want you to have the skills to trade it properly. Okay? It's easy to get a computer to make 1,000 calculations. 1,000's nothing. What's 38 times 12? I never even thought about that. What is 38 times 12? And it doesn't work. It doesn't. Yeah, that's interesting. I forgot about that. My calculator on Google Chrome doesn't work anymore. There must be some weird plugin I got going on. Does anybody know? I don't have it. I can't do it well. 3,824. Okay. It's easy for a computer to make 3,824 calculations. It's difficult for a human to do it. Those are individual calculations organized in batches of 12, so that it's not binary. And then the batches of 12 have to be compared. So there's some comparative analysis in the calculations. So let's just say it's a lot of calculations. A computer can do it easily. But it has no intelligence. 456, which one is it? Well, 38 times 10 is 380, so that makes more sense, right? Anywho. Yeah. But whatever. It's still, then you got to break them into batches of 12 and then comparative. So maybe it ends up being closer to 3,800, but whatever. The point is, it's easy for a computer to do it. And it's difficult for a human to do it, especially over and over and over and over again. And then looking at what's changed. So now you got to compare old calculations versus new calculations and see the difference. And again, a human can't do that. They don't do a very good job of it, certainly. But a computer has no problem. Okay? So what I need is for an algorithmic way of doing the calculations. And of course, I've done it. I've done it. I have a machine that can make the calculations. Add them all up and say, Good, good, good. Bad, bad, bad. Blah, blah, blah. Okay. What I want is then a human to take that information and do something with it. Because what a computer has is no common sense. Some of you have common sense, but no computers have common sense. So for example, if you made a program that then took that information and traded it, a computer, if you have a bug in your code, could simply do something like make 1,000 trades in a row. Pop, 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 pop. It could do it. I've seen EAs go nuts and do really weird, stupid things because there was a bug. Well, you wouldn't accidentally make 1,000 trades. Oops. I made a mistake. Sorry. No. So you have some common sense. And I love the idea of common sense. Okay? Well, what I want, Bernd, is both. I don't want humans making complicated decisions. I want humans making the trades, managing the risk, and using common sense. And I have a way that will radically improve your trading. Okay. So anyways, I'm hoping by the 1st of October, I'll let you know what it is. But if you already know what it is, and in particular, if you've already signed up, holy schnicker-schnocker. But it also means, maybe prices need to go up. Because I've had to spend more money. That's all right. It's all right. But I'm going to blow you away. Okay? Was that right, Bernd? Sweet. The thing is, you will know why. You will be informed. You will be able to have intellectual understanding. And also, because you're smarter than an algo. Remember, the algo can crunch numbers, but it's not smart. Okay? Computers are far from smart. Once you learn how they actually do the calculations, the more, right, you'll be shocked how dumb a computer is. Yes, it can do 1 million or 100 million calculations in a second, only because it has to. They're so dumb the way that computers are organized. It's incredible. But they're, compared to us, they're very efficient. So the fact that they can look at a million things and find the one thing that makes sense, and let's say it looked at 1,000,001 things, only to find the one thing that's a yes, and there's 1 million no's. But not even think that way. You don't even know. You don't need to go through 1 million no's to get to the yes. You could probably say, well, there's only 3 likely outcomes, not 1 million likely outcomes. So you have some common sense there. But I really want you to know why, but also because the algo is showing you what it's doing, you could say, ooh, that's interesting. Look at all this stuff that's neutral. I wonder which stuff is not going to be neutral in the near future. And you can start eyeballing that. Ooh. And now you're thinking ahead of the algo, but the algo is just giving you the clarity in which to think. And I'm excited about that. So it's not just giving you a number bleep, or a thing where it says this. It's showing you the rationale behind it. Therefore, you can think ahead. Ooh, oh, oh. Okay. So the way that a hedge fund works is that there's a portfolio manager at a trading desk trading. Okay. Below that person, there's essentially a technical analyst, okay, going through all the markets. And below that person is an associate doing the fundamental analysis and quantitative analysis, right? So the associate can give that fundamental rationale to, right, to the next guy up, and therefore can then take that information and combine it with technical analysis to look for, is there an opportunity here? Based on this research, is there an opportunity? And they do the analysis there. And then filter. And then that, right? Then you go to the portfolio manager and say, okay, I filtered it down to, let's say, 6 potential opportunities today. Here's all the technical charts that we're eyeballing. So, right, here's all the trends that look good. Here's, right, the charts. And the basis for the rationale behind it. So imagine now you got this like deep report that multiple people took. That gets given to the portfolio manager that says, okay, interesting. So we got 6 opportunities here. There's trends that coincide with the fundamentals, the rationale. You can go through all the reports and say, okay, I see that. And you take this asset versus that asset. Great. And the chart, the trends. Yep. And then the portfolio manager is the one that makes the ultimate decision. When do you buy? When do you sell? So now they watch these charts all day, every day. You might have to wait a week before you get the setup. But the thing is, you know what you're looking at and that there's rationale behind it. And you're not just chasing price and going like, well, I guess today's a down day, right? So instead, the portfolio manager can go there and maybe set up trades or stagger the trades or limp into the trades or let it come down. And then once it starts going the right direction, limp in on the way up versus limp in on the way down. But that's all portfolio management stuff. Okay. But imagine now that you had this team working for you. That's cool, right? Imagine that. I got that for you. I got it for you. I built it. It's incredible. I think, yeah. No, but that's the thing though, Arve, is it it allows for that. It allows for that. It's showing you the rationale how to get there, how it got to its conclusion, but it brings all the information to you so that you can do it yourself. You don't have to go to 19 different data sources, some of which probably cost you money, and bring it to you instantly. So now you don't have to go and do your commitment to traders report update. You don't have to pay for seasonality. What is the seasonality for euro pound? Brings it all there. Okay. Yeah. Well, it's already done for you in that case. You don't have to track GDP and job data. Dan the man, it's a whopping $79 a month. Pfft. So anywho, whatever. Think I'll leave you to it. Okay. But Arve, for example, who says, well, I could just build it, I'm a coder. If you're going to pay for access to a data API, okay, the minimum cost is more than $12,000 a year. You'll pay almost, depending on which data sources and what kind of access you want, you could pay, let's say, $24,000 a year for API access. Just to pull the data. Oh, good. You should show me what you built. I'll show you what I built. I'm serious too, Arvid. I'm very interested in what you did. Yeah. So anyways, guys, I got to go. It's a long day. It's a Thursday. Again, day traders and swing traders, we meet today at 4. Peace on earth. May the pips be with you. May our profits be above average. Have a good one. Cheers.